Hello YouTube, Salivate Metal here. We are literally days away from the next Fed meeting where they decide whether or not to raise the interest rates. It'll be quite fascinating to see. I ran across this article on Forbes talking about 3 different scenarios of the Fed meeting and their implications. And we can see here that they are measured on basis points hikes. And essentially 25 would mean a quarter and 50 would mean a half a point. Basically, that's the unit of measure that they use, and most of them are done in quarter point increments as such. And the majority of traders are betting on 97% of traders are betting on that quarter point hike or the 25 basis points. So we shall see what happens, but the Hawks are saying that they could go up to 50% or 50 basis points. And here's the scenarios that they outline in this article, and I'll post a link to it in the description below. And a lot of it talks about the implications of bonds, the bond markets, and the like, and why. And so here we have a 25 basis point hike scenario, a 50 basis points hike scenario, and then the last option would really kind of cause chaos in a sense, because it would mean that the Fed would leave rates where they are. Now, I believe, and don't take my word for it because I'm just a nobody, those people that give disclaimers about, I'm not a professional and the like. Well, my predictions, sometimes they come true, sometimes they don't, and I think that's just the odds of it with anybody that makes such a thing if you're not really a professional and the like. But there's a possibility that they could raise it to a half point, the middle option there. And I believe if they do, the reasons behind it will be based off of what Trump said in a debate in the general election, that the Federal Reserve has become politicized. And I do believe it has, and probably has been for quite a while, by the way. And if they raise the rate a half a point, then that means the markets will, there's confidence in the markets, and we might see the Dow go up above 20,000. It's getting pretty close. I think it's like 89 points away as of the recording of this video. And it will essentially make the exit of Barack Obama appear to be, hey, Donald Trump, I'm leaving you a great economy. We've got the interest rates up. We've got unemployment down. We've got the stock market at an all-time high. What more could you ask for? I'm leaving it in your hands. And that will preserve the legacy of Barack Obama. And so we shall see. Of course, we know that really there's more to it than that. The labor participation rate is obviously something that needs to be measured, and the U6 rating, and there's a bunch of different metrics from which you can measure the economy, and it's not as healthy as these numbers seem. Although I believe in something called the Trump rally, is the less regulation and lower taxes is something that the markets are reacting to, and I think that's kind of where we're at. But if you add this to it, then it could mean some good news for Barack Obama, and obviously it could mean good news for the stock markets. And if you're a buyer of precious metals, I think it could mean good news for you, because I think that gold will go down drastically, maybe even to the point that I discussed in a previous video, below $1,000, and silver down as well. And so we shall see what happens. And but I'm guessing they could raise it a half a point, but I kind of doubt it. But it wouldn't, I don't think it would be pushing the envelope too much if they were to do so. So post your thoughts below. And what do you think gold will do, when gold and silver will do? And of course, people say, well, why do you say that automatically if the Fed raises rates that gold and silver prices go down? Well, it's not a direct correlation, but it's a roundabout correlation, because when the rates go up, the confidence in the dollar goes up, and when the dollar is strong and maintains its strength and continues to increase in strength, that is bad news for precious metals prices. So there's the correlation. I'd like to extend the multitude of gratitude to you all for watching, and encourage you to please rate, comment, and subscribe.